This week, I found something in my study that might change your thoughts about XRP, the crypto market, and even gold, everyone. When I explain what's going on in the Federal Reserve System and how it relates to digital assets, you'll see why one of the biggest changes in our lives may be about to happen. We are discussing events that are so strong that they will affect every store of value against the US dollar, cryptocurrency, gold, silver, stocks, and even property. If you own XRP, this information is coming at the perfect time. I'm not telling you what to do with your money. People who participate in the market have already taken into account the 90% chance of a 25 basis point cut at the meeting on September 17th. But this is the surprising part. The US 30-year Treasury yield is back at 5%, even though the Fed is getting ready to cut. That's how it was during the financial collapse in 2008. Take a moment to process that. It's a bad sign that the system is under a lot of stress when there are high yields in a rate-cutting climate. It gets more complicated. The markets are currently wagering that there will be cuts of 50 basis points by the end of 2025, with a 1/3 chance of 75 basis points. That would need 3 cuts in a row, a very bold turn. But rates are still going up. Even after several cuts last year, banks across the country are still charging 7% to 8% interest on loans. This shows us one thing. The Federal Reserve is losing power, and that loss of power is linked to one big issue: very large debt spending. The U.S. has sold more than $200 billion worth of bonds in only 5 weeks. Because investors aren't rushing to buy, returns keep going up. The term premium on the 10-year Treasury is higher than it has been since 2014 when you really look at the numbers. This is higher than almost every year except for the 2008 crisis when people needed extra money to pay off their debts. The market is basically yelling that they no longer trust your debt. At the same time, U.S. core inflation has stubbornly risen above 3% again and is still rising. Trust in the dollar, U.S. Treasury bills, and the country's financial management is quickly failing. And it's not only the United States. Look at the world outside your country. The Bank of England has cut rates 5 times in just 12 months, but the UK's 30-year yield just went above 5.7% for the first time since 1998. The issue is going all over the world. This is the important question. Why are yields going up when central banks are cutting? The answer is very easy and very scary. Investors don't trust government debt as much anymore. The model's plan for decades has been to make money, go into debt, issue loans, and hope that people keep buying it. But they have printed too much money. Money is losing value faster than it ever has, and people who own assets that are sure to lose value don't want to keep them for a long time. Take a look at this. If you had US dollars, UK pounds, Canadian dollars, or Australian dollars for the past 5 to 10 years, you would have lost 20% to 30% of your ability to buy things. Who in their right mind would keep stacking something that loses value when they could be stacking assets with a stable or growing supply? Cryptocurrency, gold, silver, stocks, and most of all, cryptocurrency. And this is why investments in unusual assets are at an all-time high. For the first time ever on Monday night, gold reached $3,600 an ounce. There have been record-setting amounts of money entering stocks like the S&P 500. What about crypto? It's the next one. We are currently seeing some capital rotation out of crypto as people follow the trend in stocks and gold, but there's more to come. As soon as those trends cool, the same money will go back into Bitcoin, XRP, Ethereum, and other digital assets. That's when the fun starts, because the truth is this: the only way governments can keep their financial plan working is by making more money. When debt, yields, and loss of trust occur, they get out of the banks, increase the printing presses, and double down. It's the biggest and most successful Ponzi plan ever, and no one doubts it. But a growing number of people are waking up, and where do they run when they wake up? They run to assets that are safe from government inflation. That's why cryptocurrency is the best solution. It isn't like fiat. It can't be made over and over. It doesn't depend on blindly trusting governments like bonds do. It operates all day, every day in open markets, and the price is fair because of supply and demand. Also, XRP is set up in a way that most people still don't understand completely, because it plays a special role as a bridge exchange that allows people to send money across borders. Take a look at what is going on in the banking system right now. Even though the rates are said to be dropping, real people are seeing the cost of borrowing go up. This means that the APRs on credit cards, car loans, and mortgages are very high. This lack of connection is causing more people and organizations to doubt the system, and when they do, going to crypto isn't as big of a leap as it used to be. There have already been huge amounts of money going into gold and stocks. But history shows that crypto is the next big thing. and it helps people a lot more. This is because the amount of gold increases every year, and stocks depend on how much money companies make. On the other hand, cryptocurrencies like Bitcoin and XRP have a hard-coded limit, which means that no more than a certain amount can ever exist. In a world where money is so common that it is almost worthless, that scarcity becomes much more important, and this is why I think a new wave is about to happen. One that will raise XRP and the whole crypto market to heights that most people still can't picture. So, let's move on. This change is much bigger than just inflation, interest rates, and central banks losing control. A big change is happening in how world value is stored and moved around. That's what we're really seeing. If you know how these parts work together, you'll know why XRP can get a huge gain from the future. First, we are going to look again at the 30-year return that was 5%. In money matters, that number is a huge, scary warning sign, not just another figure. This means that the government needs to pay more to borrow money for a long time. And when the government pays more, it costs everyone else in the business more too. Businesses have to pay more to get money to run their companies, and families have to pay more to borrow money for cars and houses. This makes the economy slower and puts more pressure on the Fed. The Federal Reserve's plan is now easy to understand. They lower rates to encourage growth when the system isn't working right. But there's a problem. When you lower rates while inflation is still above 3%, you're basically adding gas to the fire. It makes things so that the cost of living keeps going up while savings and stocks lose their value even more quickly. That's just the kind of place where alternative investments do really well. Gold has already replied, silver is on the rise as well. At the same time, Bitcoin and XRP are slowly gaining traction in preparation for what comes next. The same pattern has been going on for more than 10 years. When people realize that digital assets are better at holding value than almost anything else, cracks form in the dollar system. Smart money first goes into gold and then into stocks before it pours into crypto. But this is the part where things get even more fun. XRP is more than just a way to keep value, which is not the case with Bitcoin. It's a utility play, which means it has a lot of different uses. Ripple has been working on a system that will let banks, institutions, and payment providers connect with each other to make faster, cheaper, cross-border settlements. And every time there is a new source of stress in the global financial system, more people want that kind of answer. If you're a bank facing rising costs of capital, you want to save time and money wherever you can. If your business is having a hard time because it's costing more to pay off debt, you want your payments to be settled faster and more easily. That's what XRP does. Right now, the old system is breaking down, and crypto is both a good place to store value and a useful option. It's very rare to see that combo, which is why I think the next cycle will be much bigger than the ones in 2020 and 2017. We will take a closer look at how investors think. For the last 10 years, food, housing, and energy prices have been rising without stopping. That's what the normal saver has seen. They have seen their pay not increase as much as costs, and they know that saving in dollars is not a good plan. So they're looking for lifeboats. Seeing gold for the first time at $3,600 an ounce makes them think that hard investments are the answer. Gold is heavy, hard to store, and doesn't move as quickly as the internet. Plus, crypto makes programs possible and fixes all of those problems. But companies, hedge funds, banks, asset managers, and those kinds of groups are a different case. In addition to safety, they want yield, liquidity, and an easy way to transfer big amounts of money. This is where XRP's system design really shines. It's easy to see why organizations finally see it as a serious tool, not just a gamble. It has transaction finality in seconds, very low fees, and lets you move money across borders right away. And we already see the first signs. With each win in court or government approval that Ripple gets, or when a payment corridor using XRP opens up, it paves the way for more people to use it. When you put that together with the larger picture of fiat systems breaking, you get the recipe for explosive growth. Take a look. The US government sold $200 billion worth of bonds in only 5 weeks. Think about what would happen if just a small part of the money that is now going into government debt was put into other assets instead, because people who put money into things decided that the risk was no longer worth it. We aren't even talking about billions. It would only take millions. We're looking for a place to put trillions of dollars. If even a small amount of that money goes into crypto, XRP will be much more popular than in previous rounds. This is why I keep saying you need to look beyond short-term price changes. Yes, just like Bitcoin and Ethereum, XRP can also be corrected. Yes, cash can move in and out as people follow stocks or gold, but there is no doubt about the fundamental trend. The cash system is breaking down more and more, and the flow of money into crypto will keep getting stronger. And it's not only the United States. Look at Europe. Their debt to GDP rates are the highest they've ever been. Look at Japan. Yields have been kept at unrealistically low levels for a long time, but inflation is finally having an effect. Look at the new markets, where the dollar is rising against the falling currencies. All over the place, faith in fiat is going down. All over the place, there is a growing need for other options. XRP is special in this setting because it sits on both sides of the question. It acts like a digital object that is hard to get, and it preserves value in a world where money is printed. On the other hand, it works as a utility ticket, enabling real exchanges and fixing issues in the worldwide payment system. It's not common for something to serve two purposes, and that's what makes XRP so special and promising in the long run. We should also discuss the point of no return in the mind. When enough people understand that dollars, pounds, and euros will definitely lose value, they will quickly start using something else. That's how an avalanche starts. It starts out small, but as more people join, it grows very quickly. And at some point, the snowball becomes an explosion. That's the direction of crypto. At this point, we're still in the beginning stage where most of the money is going into gold and stocks. But once crypto breaks through support levels again, there will be a lot of money moving from one investment to another. XRP has both usefulness and scarcity, so it will be one of the biggest winners. Let's look at this in a way that makes it clearer what it means. The world bond market is more than $130 trillion in size. If even less than 0.5% of that goes to crypto, more than $600 billion will pour in. It isn't just price increases that are caused by this kind of liquidity. It also changes what we think prices are. It makes new stories, new levels of use, and new rooms. It makes something that you thought could never happen feel like it will definitely happen. And this is the perfect time to do it. As central banks get ready for more cuts, inflation stays high, and prices go up even with policy changes, the system is showing that it can't be fixed anymore. That is the most important thing to understand. The Federal Reserve, the Bank of England, and the ECB can change interest rates, revise their policies, and print more money. But trust is the main issue. When trust is broken, policies can't fix it. People are moving their money to a place that is becoming clearer every day. Gold and stocks are fine, but the digital world needs digital wealth. People won't be using gold bars or paper money hidden in safe places for the next generation of money. It will be borderless, instant, rare, and based on cryptography. That's exactly what investments such as XRP give you. The slow but inevitable movement of value from currency to digital assets is the real story. Rate cuts, bond auctions, and inflation numbers may be what the headlines are about, but this is what really matters. And that story is just getting started. If you've been paying close attention to this story, you'll see that history often repeats itself. People move toward harder forms of money whenever governments push debt to levels that can't be sustained or boost the value of their currency. Before, that meant silver and gold, but in a world where everything is digital first, it means Bitcoin, Ethereum, XRP, and other cryptocurrencies that are made to grow. And don't get it twisted, this is the movement that is happening as we speak. We can see that it's true in the facts. Gold didn't just happen to be worth $3,600 an ounce. It wasn't random when a record amount of money flowed into US stocks. Also, the increase in the number of transactions on crypto networks was not an accident. They're signs that capital is looking for safety, growth, and efficiency all at the same time. Let's focus on XRP again, because this is where things get really interesting. When most people look at crypto, they are only interested in the possibility of making a lot of money. They ask what today's price is, how much will it cost tomorrow? That is an example of short-term thinking. XRP's true power comes from what it can do behind the scenes. Imagine being able to send millions of dollars to another country in seconds, with fees so small you can't even see them. In contrast to the usual SWIFT system, where transfers can take days, cost hundreds of dollars, and need multiple middlemen, this is much faster and cheaper. Which one do you think banks and companies prefer when their margins are being hurt, when the cost of debt is rising, and when global trade needs to be faster? It's clear what the answer is. Ripple has worked for years to build the partnerships, trust, and pathways needed to make XRP a major player in the global economy. This is the important part. When adoption hits a critical mass, it won't only be about banks using XRP. It will be about regular investors figuring out that this is the product that institutions are interested in. People will go crazy for retail goods when they realize that. It will be like what happened with Bitcoin in 2017 and again in 2020, but this time the principles will be better. And this is where XRP's usefulness and the big picture meet. The bond market is suffering because there is too much debt. Inflation won't settle down. Central banks are losing the trust of the public. All of these forces are pushing money out of fiat and into investments that can't be inflated away. At the same time, XRP is in a place where it can be used and traded. Many things will never get to that point. Let's picture what things will be like a year or two from now. Let's say that inflation stays above the goal rate. Imagine if the Federal Reserve had to lower rates over and over again to keep everything from falling apart. This puts real yields under pressure, so buyers begin to sell bonds. As they sell, yields go up even more, which makes the cost of servicing debt even more impossible to maintain. The government keeps adding to its debt and printing money, speeding up the loop. When bonds aren't safe anymore, where do trillions of dollars go? When the dollar loses value every year, where do hedge funds, family offices, and pensions go? They do put their money into things like gold, yes, but the most important thing is that they invest in crypto, since crypto is more than just a way to hold wealth. It's the main part of the next banking system. And this is where XRP is different from the rest. Bitcoin is like gold, but digital. Ethereum is the global computer. XRP is the bridge currency that allows money to move easily between different countries. They all have roles, but XRP's role is special because it is linked to the problem the world is facing. A broken monetary environment with payment methods that don't work. I used a snowball example earlier, and I'm going to use it again because it's a great way to explain what's going on. The snowball is currently rolling. It's gaining speed now that more people know that currency is losing value. As more organizations start to use cryptocurrency, as more banks use Ripple's passageways as a test, the snowball is getting bigger, and once it hits the point of no return, it can't be stopped. It turns into an avalanche. If you are paying attention now, you are ahead of the storm. Most people won't understand what's going on until prices are a lot higher. They will not wake up until after XRP has risen from less than $1 to several dollars, or after Bitcoin has already doubled again. But people who notice the changes in structure that are happening now will be much better off much sooner. This is why I keep saying that planning is important. Don't worry, not excited. It's just a matter of being clear-minded and aware of what's happening. It's not just about trading, it's about getting ready for a movement of wealth that will last for 10 years as trillions of dollars move from one system to another. And here is another important thing. Don't ignore the psychology of states. Leaders look for quick fixes when trust is lost, when money is worth less, and when debts grow. They do the printing, they leave, they fix things for a short time. Each fix, though, makes the problem worse in the long run. And every time they do this, they drive more people to other options. For that reason, I think that in the next few years, there will not only be a bull run in crypto, but also a change in how people see the role of digital assets in the global financial system. People will see XRP as more than just a Ripple coin. It will be seen as a valuable tool because it is at the center of global cash flows. When that point of view changes, the price changes too, because markets are shaped by stories as well as figures. When the main story changes to the old system is broken and the new system is here, there will be a lot of money coming in very quickly. At that point, it doesn't matter if the return is 5% or 7% or if inflation is 3% or 4%. People losing faith in fiat and finding faith in crypto is what will count. XRP is one of the best examples of a bridge in that shift. I know some of you are already thinking, that all makes sense, but how can I really use it to my benefit? And that's the right thing to ask. It's one thing to get the big picture, but a whole different thing to make sure you're in the right place.